Basically, as many stocks up as down on the New York Stock Exchange. So the breadth did kind of show some fatigue in there. It's interesting. I mean, is the market going to stall out and maybe pull back at exactly the level that everybody's been watching at 2,800 for the S&P, that really where 3 rallies failed in October and November? Who knows? But obviously coming into month end as well in just 3 days. So that's probably when you'd start to see a little bit of that knitting up and rotational activity, and it's been such a strong run for stocks.
Mike, firstly, welcome back.
Thank you.
Good to have you back. Hope you had a nice week off. In terms of what happened last week, I wonder whether the biggest takeaway is just where the VIX has ended up. I mean,
yes.
Plummeted, which
did.
is a sort of bullish signal or not?
It's a confirming signal that the market is in more stable footing, I think. But once you get down to that level, it does also show you that people have kind of almost given up on the idea that we were still in that agitated market. We're going to wait for some kind of a pullback or a retest. So I do think it's bullish on net, and there's still more room for it potentially to decline. I mean, just keep in mind, at the beginning of October, we were under 11, I think, in the VIX, right? So here we are in the 14s. So I think it confirms the move we've had, but the question is, do we have much more fuel in the tank? And on an immediate basis, can credit get much better? All the rest of those things that go into it. We don't know.
Stephanie Buffett seems to think there is more fuel in the tank because he wants to buy in, but says the market just keeps going higher, so there's not a good entry point for him. Do you see some attractive options at this point, or are we overvalued?
Well, we're up 19% from the lows, right? And that's why actually I think we lagged today, and that's why I think China actually did so quite well, because they lagged last year, right?
Yeah.
So I think you're having this push-pull between U.S. and EM, quite frankly. Those are the two markets that I think people are looking to invest in. And if you want to buy on pullbacks on the U.S., perfectly fine by me. I think the fundamentals are quite good. I do think that we're slowly checking off the boxes of uncertainty. That is government shutdown, trade, Fed, all those things are the reasons why we actually saw a contraction last year in the multiples from 18.4 times to 14 in December. We have come a long way. We've gone from 14 times to 15.5 times forward on the S&P. And so can we go higher? Sure we can. Absolutely we can. But should we pause? Probably. And maybe it's time for EM to take over, because there are a lot of interesting fundamental changes that are happening overseas.
Mike, the big bounce in China, really interesting this morning, up 5.5%. Clearly S&P ended only just positive. I'm more interested in the fact that in February, for the month so far, we're up almost 15% for Shanghai, only 3.5%. Is it just purely because it was due a bounce versus last year, or are people starting to think this deal now on the table is going to be better for China relative to expectations than it is for the United States?
I mean, the backdrop is how far it was is down, how much it underperformed, how cheap the stocks looked. Everybody said they looked cheap for a very long time, and then you have a little bit of thawing of the trade tensions. At the same time, by the way, the Chinese authority trying yet another one of their massive stimulus efforts, right? So all that stuff coming through around the same time. But I do think in terms of the timing, this idea that we're inching closer to a trade deal. And by the way, the indications of the administration wants a deal, any deal, whatever you say, let's get to a deal, that's net positive for China, because it suggests that they want some agreement, even if they don't get the longer-term structural
But you are seeing some green shoots from an economic basis in China. You've seen online retail sales in December start to pick up. Credit is certainly picking up in January and in December. It's only 2 months, so you don't want to get too excited, but there are green shoots, and people are getting excited. And oh, by the way, last week, copper up 5.5%, best since September. That is a leading indicator of potential growth, so we have to watch them.
Yeah, but China trade data with the likes of Germany and Japan was also pretty soft when you look at the German and Japanese side of the data.
Absolutely, and Germany is the scary part of this whole story, and Europe is certainly decelerating. That's why you need to see more green shoots in China to see a whole global stabilization.
Let's move on and talk about GE, which finished higher today after selling its biopharma business to Danaher for $21.4 billion. As part of the deal, GE's life sciences unit will join Danaher's life science as a standalone business. GE says it also plans to reevaluate its IPO plans for GE Healthcare following today's sale. Both stocks up in the range of 6 to 8%. Mike, from the GE perspective, everyone likes the price, but I guess it's a smaller carve out than if they gone the whole hog and IPO'd healthcare.
Right, exactly. So I do think the idea of getting, $21 billion in that strengthens the balance sheet, pays down debt, obviously a net positive for the stock. And the fact that the stock was up, even though it was up a lot more earlier in the day, the fact that it was up this much, I guess, shows there's still some residual concern about the balance sheet. So that's a net positive. Now, down the road, are people going to say, well, GE was in a position where they had to sell one of their better businesses at this price as opposed to separating healthcare altogether? Maybe, but I don't think that that's necessarily a big negative at this stage of the GE story.
I mean, they got a really good price for it. 7 times revenue, 17 times EBITDA. They delever their balance sheet in the industrial piece from 48 billion to 28 billion. You still have GE, the Baker Hughes piece. You have the Wabtec piece. So they are slowly delevering that balance sheet, and that is the #1 concern in this story near term. Longer term, do you want to own power gen? Do you want to own the business that they're left with? You just don't know. It's too early. But from a balance sheet point of view, this was the #1 priority. And oh, by the way, they are having an analyst day in terms of giving guidance later in March, and they set that date today, and I think people feel better about that.
And that's interesting with those pension liabilities. Some of that is going to be assumed by Danaher, and that's a pretty big relief.
That's right. I think actually Danaher got a great deal too. I mean, can you imagine the morale of people leaving GE to go to Danaher? And I mean, that is awesome, right? That's #1. And #2, I mean, Danaher is just such a proven, wonderful company. They just got $1 in earnings power over the next 5 years from this deal alone. So it's expensive. It should be expensive because they make great deals and they make them work.
Stephanie, is Culp showing that he's the man?
I think he's the man. I mean, I own a lot of the stock, so I hope he's the man. But I think that you got to make baby steps, and you had to fix that balance sheet. And it's not all fixed. They still have a lot of work to do for sure. And they really do, long-term, have to fix power gen. And I don't think anybody has a solution for that just yet. I don't even know if he has a solution for that. But I do think he's the right man.
They're working through